Hey everyone, welcome back to Upside Down Data. So we haven't talked about Polkadot in a while, so I wanted to give an update about it, talk about kind of the long-term outlook and also what some of our models here at the channel are making of DOT's price action. So with DOT, it is a fairly young asset in the crypto space. It only really started trading in the kind of middle of 2020. So it caught, the bulk of that big move up into the spring of 2021. And we've actually gone ahead and round tripped just about to basically the levels where we started trading. Now, obviously, having started in the middle of 2020, things were already starting to look bullish for the crypto space. So because, DOT wasn't around for the March 2020 crash or 2018 bear market, it could have, price for DOT might have been way lower had it launched during those times. But still, this is not desirable, right? This is not what you'd like to see. DOT basically completely round tripping from where it was launched, more or less, or at least down into the same general type of range. More or less, it's holding as support what acted as resistance all the way back here at the beginning is the way that it's been acting. But in some ways, who cares, right? Because we're in a bear market, you're expecting everything to kind of bleed off. What we want to talk about is what to think about going forward, right? What is DOT looking like from a risk-reward perspective? How is it looking in terms of its kind of thesis, its kind of fundamental value, and also how is it holding up relative to some other assets in the space? So that's what I want to talk about here today. So first off, I just want to talk about relative strength of DOT versus other big crypto assets in the space. And so obviously the ones that people compare most altcoins against are Bitcoin and Ethereum. So that's what I just want to talk about here first. So this is the DOT Bitcoin chart here. So basically you just take the price of DOT divided by the price of Bitcoin, and then you get this ratio that is, the number of Bitcoin you could buy for one DOT, which is, a tiny fraction, obviously. But the usefulness of this metric is that when it's going up, it means that DOT is outperforming Bitcoin, and when it's going down, it says that DOT is underperforming Bitcoin. And what we can see is that DOT, throughout its whole history, has more or less just kind of held its level against Bitcoin. At the beginning, it was kind of moving up against Bitcoin. Then into this bear market, it had been losing against Bitcoin. And now really ever since, June, that big capitulation in early June, it's just been kind of going sideways against Bitcoin, occasionally outperforming, then falling off, really just kind of in a tight range down here. But really what this kind of tells me, just looking at its whole history, is that, this one positive sign for DOT that's not just bleeding its entire life against Bitcoin. You see some altcoins do that, where they might have some initial rally against Bitcoin, then they just bleed forever afterwards on their way down to an eventual zero. DOT's not showing that type of behavior yet. It basically, kind of long and short over all of this is that your money was just as well put in DOT as it was in Bitcoin, generally speaking, throughout this, with obviously some bull runs of DOT against Bitcoin and some bear markets of DOT against Bitcoin. But generally speaking, it's just kind of been in a range against Bitcoin this entire time. Something incredibly concerning. That's one characteristic you'd like to see of crypto assets, that they at least keep pace with Bitcoin being traditionally thought of as, the least risky crypto in the space. Now, a chart that's a little bit more concerning for DOT is its comparison to Ethereum. So this is the DOT ETH chart here. And what you can see here is actually a pretty notable downtrend, setting in, lower lows and lower highs against Ethereum, generally speaking, all the way throughout where we are right now. Now we have stabilized against ETH, a little bit more recently. They've been kind of just going sideways. Even as ETH was really pumping like crazy into the merge, DOT was actually holding up relatively well, in this period, although it had a big bleed off against, Ethereum during that initial pump Ethereum showed going into the merge. But really more recently, it's been kind of holding steady. But generally speaking, this is a little bit more concerning. And so then, the question that one always has to ask when they're confronted with a chart like this is, do you think that something fundamentally is going to change that's going to suddenly make DOT be a better investment than Ethereum? Or is DOT likely to just continue bleeding against Ethereum? And if the latter is true, why would you hold DOT instead of Ethereum? And if the former is true, what are those catalysts that might actually break this downtrend against Ethereum and actually have DOT start to appreciate against Ethereum, actually start to outperform Ethereum, which it's not really so far been able to do. It's generally speaking just been a downtrend against Ethereum with just occasional bull runs against it. So I think that sets us up for the next thing I want to talk about is, what is the thesis for DOT? Why should we bet on DOT versus Ethereum, if we're going to be looking to hold DOT instead of something like Ethereum or, any other number of alternatives? What is it about DOT that makes it so attractive? And, there's many different reasons why one can like DOT. the way that I kind of tend to think about it is that the fundamental kind of benefit of DOT is that you're not just investing in DOT when you buy, DOT tokens. You're actually investing in its ecosystem. So DOT, of course, is a layer 0. It has a bunch of parachains that are built on top of it, with the addition of parathreads that can also come in as additional chains into it. And the big benefit of that is that it provides shared security amongst all those different parachains. And then also they can talk to each other. There've recently been upgrades to the DOT protocol, Polkadot protocol, that allow for this interoperability amongst the chains that are built on top of it. And so really, kind of the way I think of DOT is you're not just investing in DOT, you're investing in all these other chains, like for example, Moonriver or Moonbeam, which can then have a lot of protocols built on top of them. So I'm over here on DeFi Llama, where we can look at DeFi adoption. And of course, DeFi adoption is just one utility, one use case of these kind of chains. But I think it's just a one that can give us a more quantitative look, that it's easy to just kind of stack things against each other. And so really with DOT, Moonbeam is built on Polkadot, Moonriver is on Kusama, which is DOT's kind of sister chain. But if we just look at a chain like Moonbeam, really what you're doing, and Akala is another one, for example, Parallel Finance is another one that's on Polkadot. The benefit of this kind of approach is it differentiates itself from something like Ethereum, where Ethereum certainly has a ton of protocols built on top of it. And of course, Ethereum is number one on DeFi adoption by a massive margin. But the benefit of the Polkadot approach is that you're not constrained to one blockchain. And that really helps for scalability. You can actually have a whole bunch of different blockchains that are running, which each in and of themselves is probably going to be faster than something like Ethereum. But then also, because you have all those different ones in one ecosystem, you can spread out the load across all of them. And so you can have highly scalable chains that are parachains that are then partnered basically through the Polkadot ecosystem with other chains that are all, probably more scalable, and they can all talk to each other and kind of build this one big ecosystem. So just look at the Moonbeam page here on DeFi Llama, you can just see all these different protocols, just DeFi protocols, not to mention the other things that are already built on Moonbeam, which in and of itself is just one parachain that's built on top of DOT. And that's really kind of in the way I think about the fundamental value of what Polkadot's trying to offer, is this interoperable ecosystem. And the value of DOT should not just be based on, a certain set of protocols. It's actually based on an entire set of chains, which themselves can have entire sets of protocols. And so I think that's what a lot of people see in DOT, is this ecosystem play that is, in theory, a lot more scalable than something like Ethereum, which again is everyone fighting for the same block space, which can then, of course, in bull markets lead to those super high gas fees that we see on Ethereum. So I think that then the question that we have to keep in mind with DOT, or something to look at, is, is it going to start really delivering on that? So certainly there's a lot of development that's already happened on DOT. And what I'd be looking for going forward is, does that continue? Can DOT continue to get new protocols coming in, more and more interest, people who want to build not just parachains, but also even parathreads on top, which also brings in a driver of demand for DOT. And then also, can all of these chains start to, really build out some value? One of the things that was unfortunate for DOT more recently was that Akala, which is one of the kind of bigger or more hyped parachains on it, a very DeFi focused parachain, which had a decentralized stablecoin that was kind of one of the kind of big hallmarks, AUSD. There was a huge issue with Akala back in August, where there was almost 3 billion AUSD that were accidentally minted just due to a glitch in some of the code for one of the liquidity pools that they had put on. And this caused, it was this one, the IBTC AUSD liquidity pool, caused this glitch that allowed that to happen. And so really Akala kind of had to shut down. They had to go and basically try to hunt down all those AUSDs so that they could burn them, and basically allow AUSD to regain peg with the dollar, where it dropped to being worth just a cent or less, at the worst of that big calamity. And so, setbacks like that are not good. And so in the short term, those are certainly not going to be good for something like DOT, where if this is one of the big, parachains that it has to its name, it's not great to see that. But in some ways, the way I think about it is that we're in a bear market, so in some ways, who cares, right? The stakes are relatively low in a bear market. There's not this big hype cycle where if you, fail to catch it, you just get left in the dust. This happening certainly wasn't good for Akala, and then, by extension, probably DOT as well. But memory is short in crypto. I think the next whenever the next bull run comes around, people aren't even going to remember this, right? No one's even going to remember. A lot of the people who will be in the space at that point weren't here, right now. They won't know about this happening. It's probably not going to matter too much in the long term. And so that's where I think kind of a holistic view, not getting too bogged down in kind of specific little issues, but just generally speaking, can DOT continue to get more development in its ecosystem? If so, then I think the thesis is intact. If there's signs that that is weakening, that developers are choosing to go elsewhere, and that DOT is kind of being left behind, that would be concerning. Because again, with these kind of things, with L1s and also L0s, adoption so far has been really one of the big drivers of price and success. And we really just see that just looking at DeFi Llama. Look at the things in the top here, Solana, Avalanche, Binance Smart Chain, all chains that have done extremely well, really seeing their price appreciate nicely. Adoption matters, at least in my opinion. It's a fundamental factor that will matter. So of course, up to you to make that determination. I'm personally not concerned about DOT's, adoption. In some ways, with all of this, DOT's so young that the possibility of this trend breaking is very plausible. Don't know when that would happen, but I think it's very plausible. And if it can start to realize some of that fundamental value, and especially if it can really leverage that into a next bull run, where it can really get a lot of people to coming into its parachains and really want to use those parachains, that could be a very bullish setup. But again, while we're in the bear market, probably not a lot exciting is going to be happening with DOT. It's more about watching those fundamental factors. I wouldn't expect DOT to be going on any crazy runs anytime soon. And there's more reasons why I say that. So let's go ahead and flip over to some of the models we have here on the channel that kind of back up my thinking that with DOT, probably nothing too exciting is going to happen with this price action for a while. It'll probably take that big turn in the market for these to kind of pop off. And so the first chart I want to show you here is the momentum bias indicator, or MBIs. This is a model that we have here on the channel. It quantifies momentum in an asset. So the idea of momentum bias is that if the momentum is biased to the upside, that means that price is going to kind of get pulled up with it, and that's at above zero on the MBI. And if it's biased to the downside below zero, that tends to be these bearish times that kind of price gets dragged down. Again, this bias of momentum up, bias of momentum down. And what we're seeing more recently, coming off of the November all-time high for DOT, coming into this horrible, pretty much down-only bear market we've been in, this is telltale signs of bear market behavior on the MBI. This is, basically totally prototypical bear market behavior. This is exactly what you see in bear markets for assets, where early on in the bear market, you set this negative momentum bias kind of pattern regime. You stay down there for a long time. You have this attempt to reestablish a positive momentum bias to get back above zero. You fail, you get rejected back down below zero. You try again, you fail, you get rejected back down below zero. And then as that's happening, price tends to kind of bleed to the downside, or at the very least, not being able to go anywhere meaningful to the upside. So far we have not seen any definitive indication that that pattern is broken, right? We had our first failed rejection going above zero, second failed rejection trying to go above zero, and now we're just gonna have to wait and see what it ends up doing. What I would like to see to kind of change that perspective, looking at the MBI of bullishness or bearishness from that kind of broader perspective, is what I'd like to see is us to get back up to positive momentum bias territory pretty soon, be able to spend more time up there and really start to oscillate around zero. I've talked about this with other assets, with Bitcoin, Ethereum, etc. A behavior you see in transitions between bear markets and then into a new bull market is what'll happen is you get into this kind of accumulation range, which who knows, it's possible we're there now. It's possible another leg down is coming. Don't know yet. But you'll get into some kind of accumulation zone where more or less price is kind of going sideways, more or less. And then what oftentimes will happen when you're starting to get into those accumulation zones, you'll see that the MBI will start oscillating around zero. You'll kind of get up to a positive momentum bias, down to negative, up to positive, down to negative. And that tends to happen in those transitionary periods where the momentum in the market is basically just sticking around neutral, which is zero. It's just kind of hanging around a more kind of neutral momentum bias, oscillating around with natural volatility. And then what you'll see is it start to kind of spend more and more time up in the green relative into the red in that oscillation. And that really often happens in the build up into those big explosive bull runs. So what I'd like to see would get me more hopeful is if we can go up, get back above zero, spend more time up here, start that oscillation pattern. And that could even happen while price just goes sideways potentially. But if that does happen, then that might be more indication that we're entering into more of that accumulation phase and not just into the next leg of the bear market, which right now, there's looking at it now, it's very possible we could be going into another leg down. So that's why short term, I'm not, very optimistic that that's just going to explode to the upside. Obviously it's crypto, anything can happen, but I'm not optimistic of that. It's certainly not my base case. And there's some things that I'd be looking for, and this is one of them, of how the MBI starts behaving. So obviously that's a more bearish kind of outlook, or at least certainly not bullish, not super favorable, just kind of saying that at best, I think we're going to kind of chop around in our current, range. But we can also talk about what this means, more broad term in terms of risk reward for DOT. So we're going to transition over here to our upside downside potential indicator, UDPI, showing you the long-term version that cares about moves that play out over months to even years, so more macro focused. And this is our risk indicator. It basically quantifies how much upside versus downside potential is plausible from the model's perspective for the asset at a given point in time. So being up towards 5, that's high risk. These points here where distribution is advantageous. And then these low risk points down here have, historically speaking, been good accumulation zones, when moves to the upside often can follow. And what you probably noticed is that we have been in a fairly deep green place, fairly recently. We can see this if we just flip over to the raw levels of the model. So the yellow line here is the DOT price, white line is the UDPI level across time. And so what we can see is that, we had gotten up to, super high risk in the big run up in early 21, back up to those high levels of risk again throughout that run going into, the all-time high, over here in November. And then we had the bear market, and then, risk has been kind of going down. And, we set in our lowest level back over here towards, the June lows. And then we had this kind of relief run here. That was where the NBI was trying to flip bullish again, but then got rejected. And now we're kind of just hanging out in these low levels of risk all the way down here. And so what that means from the model's perspective is that there's a lot more upside potential than downside potential that's realistic for DOT in kind of the longer term. Doesn't say that we can't continue to go down, right? But what it's saying is that, risk is getting more kind of bent in the direction of positive risk reward versus negative. Now, you always have to kind of evaluate these data in conjunction with your long-term fundamental thesis for something like DOT. Do you think it's going to be able to perform on all of its promises, to actually realize those promises? And if so, if you're confident that DOT's going to survive the bear market, that it will see appreciation in the future, then when you look at a chart like this, this is just basically telling you that DOT is, from the model's perspective, in a favorable risk-reward perspective. Now, again, as I mentioned before, and I'll say it again, it doesn't mean that we can't have another leg down from here. Just because risk is all the way down here doesn't mean we can't have another leg down. So you have to always keep that in mind. What it does mean is that, in the broader kind of macro context, because again, I think DOT is tethered to what the rest of the market does. As I mentioned before, I think DOT will re-enter a bull market when the rest of the market re-enters a bull market. It also kind of comes into where you think we are with that. Do you think that there's going to be a big meltdown in macro that's going to cause everything to tank? In which case, a lot of this goes out the window. But if not, if you think it's plausible the bottom's in, what this is telling you is that, this is about as good as you're going to expect in that kind of situation for risk reward. So not financial advice, just what this model is suggesting. Now, the final thing I wanted to mention from risk reward is that UDPI is not only useful to look at an asset against itself in its own history, but it's also useful to look at across the space. So if you've been following the channel, you're probably aware that we are developing a website in conjunction with Jay over at Daily Crypto Analysis. I'll leave a link to his channel in the description. Definitely check him out if you haven't already. Makes great content on the crypto markets. And one of the things we're going to feature on this website is a dashboard that will show you UDPI levels across a whole bunch of different assets that we are tracking in real time with their UDPI level. And so we can just go ahead and say, here's DOT right now. And the one thing I just wanted to point out is when you compare DOT's UDPI levels to a lot of the other assets in the space, it's pretty good. It's actually sitting below a good number of them. Not all. There's some that are sitting a little bit below. But in terms of its kind of relative risk reward, it's sitting pretty favorably against a lot of other assets. Better than ETH right now, better than BNB, better than XRP, which has been pumping recently, better than ADA, even arguably better than Sol on some, at least in some of these timeframes. So we have a short-term and medium-term UDPI. This is days to weeks, and this is weeks to months. Now I was showing the long-term, all three here. But again, across all three, it's basically saying that DOT's oversold in this point from its estimation, and even to a greater degree than a lot of other crypto assets. And so that's one of the useful things about this model. It's not just going to tell you, for its own asset, how is it relative to its own history, but then you can also compare it across assets and see, which one's offering the best risk reward from the UDPI's perspective. DOT is certainly not sitting in a bad place right now. So overall then, what does that kind of leave me with my overall impression of DOT, my overall place where I am right now? And again, the thing that really it comes down to is, where do you think we are in the macro context? Do you think that it's plausible the bottom is in? And if so, UDPI is screaming value here very loudly. And, the MBI is still bearish. So that's the thing that we have to, be a little bit worrisome there. But the MBI is at a point where it could start that kind of transitionary behavior, which again would then reinforce what the UDPI is saying, where this could be an extreme value point before a move to the upside. But again, if your macro outlook is a lot more bleak, then it's hard to even see this as being all that attractive if you think that, the stock market is going to go crashing 50%, and if Bitcoin is going to go crashing down to 10K or whatever. If that's your base case, then, something like this is probably not going to be looking all that favorable. So that's why everything has to be made in that kind of perspective. My overall take, though, is that kind of beyond all that, which are in some ways kind of more short to medium term considerations, I still think the thesis for DOT is intact. I haven't seen anything yet to make me think that DOT can't deliver on its promises. We'll have to watch it to make sure it does. There's nothing saying that it can't. And certainly the parachains have started to, they've gotten off the ground well, and they've gotten some adoption and some usage, especially chains like Moonbeam, for example, have been doing quite well, even if the token itself hasn't been doing all the well in terms of its price. And, bear markets are for building, and that's what you should be watching, in my opinion, for the more fundamental factors. Are these chains doing what they should be doing from a development standpoint? And if so, that means they'll be set up well for that next bull run whenever that comes around. If they're not doing that, then they probably are only going to be able to rely on hype, which can only get you so far, versus other chains that have more to back them up and more, usage and hype drivers, into their ecosystems. So I think DOT remains sound, but where it's going to go in the short to medium term, I think really depends on your macro outlook. So not financial advice, just my thoughts on where DOT sits right now. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. A lot of updates, better indicators, and more over there.